Here with this week's hottest stories in the investment world, this is Zacks Friday Finish Line.
Hello and welcome to the Zacks Friday Finish Line. I'm Ryan McQueenie, a content writer here at Zacks, along with one of our editors, Maddie Johnson.
Hello.
Today is Friday, July 8th, and we're here to recap this week's biggest stories.
Yeah, so we'll be touching on a few things today. The week hasn't been terribly busy with news post-Brexit, but
a couple things here.
Things here and there. So Netflix has had some news this week. In a surprising new partner. There was also some interesting news from a famous snack maker, and we'll be taking a look at the state of the IPO market towards the end of the show. But first, let's look at some news that broke in the biopharma sector yesterday afternoon.
Yeah, so it broke yesterday afternoon and is kind of continued on into the morning, especially morning trading Friday. It involves Juno Therapeutics, trades on the NASDAQ as JUNO. Some not great news for Juno investors or the company as a whole. Shares were down 31% this morning after the FDA told Juno to put a hold on one of its clinical trials after several patients died. So this next part is going to be the part where I don't know how to pronounce some things.
They are very complicated words to even type.
As is the case a lot with biopharma news. So the study was a phase 2 clinical trial of JCAR015, otherwise known as the Rocket trial. So it was for adult patients with relapsed or refractory B-cell acute lymphoblastic leukemia.
Nice.
So I think I got that pretty well. So it's a cancer that affects the immune system. Last week, 2 patients died that were in the clinical trial after another chemotherapy drug was added to the treatment. It was the same drug that was added to the treatment that caused another. Well, I shouldn't say cause. It was the same. Another patient died at the end of May after the same drug was also administered during the trial.
One would think would be a red flag.
I think that, well, yes, and the FDA definitely raised that red flag yesterday. So it was actually trading was halted yesterday afternoon, and when it reopened this morning, shares were tanking. The FDA has put a hold on the trial, is asking Juno to submit a revised patient-informed consent form, basically revising the whole,
the whole trial.
Yeah, the whole thing, like in basic, like how they presented to people who want to be in the trial.
Right.
So not only is Juno being affected, basically the entire biopharma sector was getting hit by this today. Kite Pharma, which trades as KITE, was down 8%. Even Bluebird Bio, which trades as BLUE, was down 2% this morning. Not great news. Definitely not great news for Juno and the patients in that clinical trial. Hopefully, things can get back on track soon. Guess now pivot to a little bit better news, a little bit more positive.
More almost surprising news. So Netflix this week announced 2 different sets of partnerships. Netflix trades as NFLX on the NASDAQ. The first one was with Comcast, which trades as CMCSA on the NASDAQ as well, which is surprising because Comcast has been almost a main competitor to Netflix. An enemy?
Enemy sounds harsh, but definitely they're competitors.
Now they're frenemies, we could say. But
I like that a lot.
Yeah. But the 2 companies announced that Netflix will now be available on Comcast X1 platform, which is huge.
Yeah, for those of you who don't know, the X1 platform is basically Comcast's response to like a Google Chromecast or a Apple TV or any of those devices that plug into your TV and are your hub for your streaming services. except for Comcast X1 platform does a little bit more than that. Since it's Comcast thing, it's also your hub for your DVR and your regular cable and
So it's a way for
on demand and
for
whatnot.
cable subscribers to not really, to not cut the cord all the way, but to be able to
To incorporate their other applications or subscriptions into their
right.
and so now Netflix is going to have its own. I don't know if their application's technically on it. Like I don't know if it has to be downloaded or if it's just there on the X1, but it'll be on the X1 platform now.
Much more convenient than I guess switching back and forth between two different platforms.
Yeah, I can say I definitely used to be on the like switch the HDMI cord to the laptop grind. So this will definitely help for that. Thinking about it even from a more business standpoint probably helps Netflix get in the face of some people that don't have it yet.
Definitely, for sure. I would think it's almost like a trial run. So those
Yeah.
cable diehards can kind of see what Netflix offers
Mhm.
and then potentially make the switch over
Mhm.
or just have it as a little on the side treat.
Yeah.
Um,
But definitely surprising is Netflix is really going against these big
Right.
cable companies, and Netflix's CEO has been outspoken in his disdain for Comcast in years previous, so openly clashing with their executives over net neutrality issues.
I see.
So definitely interesting that they'd be getting along. but-
Yeah. So Netflix, in addition to Comcast, they've also partnered with the CW, which, if any of of you listeners are not familiar, is just a hub for teen drama.
Yes.
Like the Vampire Diaries, The Flash, Supernatural.
Arrow, don't leave
Arrow.
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 out,
Okay. Also, Jane the
which is
Virgin.
Arrow's a really bad show. Sorry, fans. It's not good.
So Netflix will become the exclusive online streamer for all of the CW shows. So all of, let's say, the Vampire Diaries, which I used to watch religiously.
That doesn't surprise me. You seem like
well,
a Vampire Diaries type of person.
Everyone is just so good looking, and especially Stefan and Damon, the two vampire characters.
Mhm.
They're very beautiful.
Mhm.
Anyways, so yeah, so starting, I think later this year,
Mhm.
Netflix subscribers will be able to watch all of the past seasons of the shows that we just listed and more. And then newer shows that the CW will premiere.
And this is coming just a few weeks after we found out that Netflix was going to be the exclusive online streamer of Disney content as well. So a lot of moves being made by Netflix.
So, it almost seems like the Netflix content library is now it's almost
Expanding.
unbeatable.
Yeah. Well, definitely.
To an extent.
It's not. I don't know if there's yet to be anything that is even comparable to their content library, as far as just the wide variety of content.
Right.
But with the CW Disney, I would say that was obviously a great pull from them.
Yeah,
but,
for sure.
They're definitely doing a lot of things to make
Yeah,
sure.
some interesting moves. But our next story comes from Hostess,
Mhm.
the maker of the beloved Twinkie.
Yeah.
And Ho-Hos.
And Ho-Ho. Don't leave Ho-Ho out of it.
Love Ho-Hos.
So, yeah, there was a few years ago when Hostess was going bankrupt. There was, I don't know if you remember this, that there was like mass rumors where they were going bankrupt and you better stock up on Twinkies. And
I stocked
Ho-Hos
up.
and other like assorted cake-like snacks.
Right.
Because they were going out of business and they were going to be gone forever. That didn't end up. The bankruptcy wasn't that extreme. I don't remember ever there being a time where Twinkies weren't on the shelves.
Right.
But they went through a bankruptcy in 2004, restructured, went through another bankruptcy in 2012,
Okay.
and had to sell some of its assets and its brands off,
Right.
basically to liquidate it. There was also a huge standoff between the company and its workers' union.
That was huge.
Deal. Yeah, 15,000 people ended up losing their jobs from Hostess in the fallout of that. huge moves. So the Hostess brand and what we know Hostess for as far as the Twinkies and the Ho-Hos that we talked about, that got sold off to private equity investment firms.
Right.
Um,
Yeah.
and now a few years later, those firms, the biggest of which is Apollo Global Management, selling a majority stake in the company to a publicly traded affiliate of the investment firm, the Gores Group, for about $725 million. So after the deal closes, Hostess's current owners will hold about a 42% combined stake in Gore's holdings. And with the way the numbers work out, Hostess now has a valuation of about $2.3 billion.
So not a simple way to go
No,
public.
no,
It's
no,
just
no.
this is quite the complicated transaction going on.
Yeah, it is.
It feels like a lot of people are
A lot of money moving
Yeah.
hands, a lot of people.
a lot of people in like the circle of investors wanting to get a piece of
Definitely.
Hostess.
Definitely. So I would say props to Apollo Global Management on turning getting in just
Oh yeah, they deserve a
4 years
huge
or
round of
so,
applause.
getting Hostess back on its feet. So props to the brand and the firms behind it. I guess best of luck to
Yeah.
the
I
company
mean,
going
do you
forward.
have a favorite Hostess snack?
Do they make zebra cakes?
You know, I was literally just thinking about zebra cakes because those,
Do they though? Are they?
I don't know,
I don't know if Hostess makes zebra cakes or not.
but those are
In that,
fantastic
I'll say
regardless.
then in the genre of snack that we're talking about right now, whether Hostess makes it or not, zebra cakes is definitely my favorite. Also, I'm gonna throw a hot take out there. I think Twinkies are overrated. Hot take.
Hot take.
I think Ho-Hos are better. First
Ho-Hos
of all,
ding dongs.
Ding Dongs are better.
So good.
I
Even
just think Twinkies are overrated.
I think they're good. When you like want just like something simple, but there's just better options out there than a Twinkie.
So I've gotten word that Little Debbie is the person who makes zebra cakes.
You know,
So
I think Little Debbie's also make honey buns, which are also fantastic.
yeah. Oh wow, honey bun is amazing. All right, I've already had lunch today. We can't make me hungry again. But I was very excited about this transition earlier, so I'm gonna do it now.
Okay.
Speaking of companies going public again, we're gonna look at the state of the IPO market this year.
Yeah, let's do it.
Okay.
Because it's been a slow move coming.
Very, very sluggish first half of the year in the IPO market.
Yeah.
We've only had about 40 US based IPOs priced this year.
And honestly, I could name 2.
Yeah. Yeah.
I mean, maybe one that's happened and one that is going to.
Twilio was big in the Line IPO,
Yeah.
which is getting a dual listing. So I don't know. That's definitely, yeah, it's been very slow. Definitely slower in the like big name company
Right.
variety even. So worldwide IPOs were worth just about 9.1 billion in the first quarter. So that more than doubled in the second quarter, but the second quarter was still down 56% year over year.
56%.
So
wow.
that's like staggeringly slow.
Yeah.
And staggeringly, I don't want to say bad because, it's not necessarily a statement about the overall performance of the markets. I mean, we obviously saw a historically bad start to the year.
Right.
Stocks have rebounded since then. So it's not like it's been a horrible investment environment so far throughout the year. There's been our ups and downs. I'd say the 3 biggest things that we were looking at as far as causing the sort of uncertainty and volatility in the market that tends to make companies looking to go public go, okay, we can wait a little bit, is start of the year there was concerns about just the overall state of the Chinese economy, which then was kind of quickly followed by a bunch of uncertainty over U.S. interest rate hikes. When are they coming? Are they coming? who knows how many this year, any more this year, question mark. I mean, there was just a lot of uncertainty in that. And then once we kind of bounced back from that and it was looking to be an environment that might start encouraging IPOs more, all of a sudden Brexit comes on the horizon. And we dealt with that.
Just like a bomb.
Yeah. I mean, and it definitely made its impact.
Right. But
so
stocks have rebounded.
Yeah, definitely.
Wasn't as bad.
I mean, we talked about this last week too.
Yeah.
There's, I would say, a handful of reasons why stocks rebounded since then. But I think overall, what those three factors did is just kind of, like I said, create a certain level of uncertainty. And when you're a company that's looking to go public and to have this big, IPO and get some attention to your company, raise money, value your company at a impressive point, you don't want to go public in any sort of uncertain market.
Right.
So my question to you would be then, is the uncertainty of 2016 past us, and will the IPO market start to heat up again?
I don't see it starting. I mean, I feel like a lot of companies and a lot of talked about private companies, let's say like Uber and Airbnb, they're getting so much money and so much investors from these huge VC firms that they don't need
big private funding.
They don't
rounds.
need to go public. They don't need to start trading on the market because they're getting so much funds already from private sources. So,
well, okay, so that's the case. I would agree with that being the case for. I would say we could make that analysis kind of on a case by case basis. Is what I was trying to say. Is that I think with a company like Uber right now, where we've been hearing about when are they going to go public since early last year in 2015. And coming into this year, a lot of people definitely thought, okay, this makes sense. This is the year. And then like you said, you realize with Uber, they've got plenty of money coming in from these private funding rounds. They're struggling to turn a profit right now, as in losing a lot of money, several billion.
Just a little billion.
They're still expanding into these emerging markets where it costs a lot of money for them to break into these places. Advertising is expensive, getting the word out about Uber. Then you go, okay, it makes sense. They're getting this private funding money, and they're also in an economic point or a financial state where it doesn't really make sense for them to go public and have the added pressure of having all your financial details out there and having all these shareholders that you have to think about. But, that's not always the case for every company. And, at some point, when people ask about raising money, IPOs are the most reasonable option, or the best option, I should say. So let's look at some of these companies that could reasonably, because I think Uber by now we're probably going, okay, that's going to be a while. Airbnb will be a while.
Yeah, Lyft will probably IPO before Uber.
Yeah, I would say that too. So some that could be on the horizon, if you will. So Spotify, the biggest name in music streaming, online music streaming, other than like Apple Music.
Yeah,
definitely
I think the most well used.
Yeah,
could argue.
It's been rumored to be preparing for an IPO this year, to generate up to $1.3 billion in revenue from it. They recently raised $1 billion in financing via convertible debt. So with the promise to its debtors that they will receive a discount on shares of the company at its IPO. So I believe the people who gave them the $1 billion in credit are then receiving a 20% discount on shares during the initial public offering. And the details of the loan or of the convertible debt deal were also so that Spotify will pay 5% of interest on the debt for the first 6 months, and then it will be it will go up 1% interest for every 6 months that until they go public.
Interesting.
So that almost kind of makes it a bigger incentive for them to go to IPO sooner rather than later.
Yeah, definitely.
Because they've got this interest stacking on top of each other the longer that they go without an IPO. So Spotify could be on the horizon. That'd be certainly an interest one. Up to a $1.3 billion IPO is certainly a big one.
Are you a Spotify user?
I am a Spotify user. I accidentally have been a Tidal user for the past 3 months because I got a trial and then have for 3 months consecutively forgotten to cancel my trial. So I canceled my Spotify Pro, my premium for Spotify, because I was like, why would I double lap?
Right.
I don't like Tidal. I'm trying to get back to Spotify. I keep forgetting though.
Yeah. Well, I guess so I'm a Spotify user reluctantly, I would say, only because it was all the music that I wanted to listen to. I ended up needing the membership, and I'm like,
yeah.
Well, okay, I will do it.
Well, that's what Spotify does too, is you can listen for free for a certain, and you have a certain amount of access to it for free, which is definitely interesting. It's a good way to rope in customers, kind of going with the Amazon Prime route, where you're more likely to use it if you're a paying customer.
Right.
Yeah, so Spotify could be on the horizon, if not this year, within the next 12 months or so. I wouldn't be surprised at all. And should be one that makes some waves. So looking forward to that. Also, one that could be close is Jose Cuervo.
Jose.
Everyone's favorite tequila.
Our friend Jose.
I don't know if you could hear the question on everyone's favorite tequila. Because
do you have a favorite tequila?
No, I don't like tequila personally.
Oh.
But, to each their own. Jose Cuervo is the most popular tequila brand in the world. 33%.
I can see that.
They have a 33% share of the market in the United States. I know that. So, people do like it. They're preparing to raise up to $1 billion in their IPO, which, reports are suggesting could happen as early as the third quarter of 2016.
Do you know how long they've been
around? Very long time.
And I'm wondering why
they're owned by a very wealthy family in Mexico. I believe the parent company is called Cuervo. Not Jose though. I should know that. So even from there is a question of would it be listed in Mexico, the United States, both? Who knows? Because it is just rumors at this point. But apparently, the family has been talking to investment firms about preparing for something soon. Another company that's been holding discussions is Blue Apron. Have you heard of Blue Apron?
I have heard of Blue Apron. Haven't been too convinced. I haven't been convinced by, I guess, their marketing strategies enough to want to try it though.
So they are a maker of prepackaged meal kits. Basically, they send you the recipe and then everything you need to make the kit or make the meal, and you put it together yourself. It's kind of like a cool mix between buying food out, but then also being able to make it yourself if you're into that.
It's like an expensive
it's
option of
you get
that combination.
I think the most popular one is meals for 2 3 times a week for $60 a week, which isn't awful, but is definitely not cheap.
Yeah. Like for me, like that's just dinner. So you need to like factor in everything else you would need to buy at the grocery store.
That's a great point. They recently hired a former Under Armour executive, the former CFO of Under Armour. He took over
that's a good move.
He took over as in the CFO position at Blue Apron. I believe he was around when Under Armour went public too, so perhaps some experience doing that. And apparently they have been speaking with investment banks, and was a classic case of what I was saying earlier, where they're looking for ways to raise money. So they've been speaking with these banks, holding preliminary hearings about ways to raise money, and an IPO is one of those options.
Gotcha.
So they're looking for ways to get some cash, and an IPO might just be that route. So Spotify, Jose Cuervo, Blue Apron, among the few that, or I would say, are realistic for ones that we could see by the end of the year.
And huge brand names too. They're not just like small,
Right. Definitely. And
I
that's
guess unknown companies.
I think that's what we're looking for. With Twilio, you saw something successful, something especially in the tech world that was successful, and raised a lot of buzz. But at the end of the day, you know, they only raised something like 200 million in there. It wasn't a huge IPO, and was one of those ones where it definitely came with the question of Twilio IPO today. What is Twilio? Jose Cuervo goes public. Everybody knows.
Right.
Everybody knows what it's about. Everybody knows the product. So,
and then you have Line, who's going to list
of course,
next week.
Line is coming up in next week. Yeah, I think the 15th, the 14th, and the 15th.
Yeah,
because they're doing a dual listing, so it's over the course of 2 days.
It'll be interesting to see how that does, and how
I think they'll
be able to grow over here in the U.S.
Yeah, that'll be probably the, a signal to the rest of the market about how IPOs are going to go, especially in the tech world.
Definitely.
So maybe a clue for Spotify as to what the environment is like for right now. And so definitely something we need to keep our eye on next week to see, how that's going to play out, or how that does play out, and will definitely help us with this kind of conclusion of, will the IPO market take off more in 2016, in the second half of 2016? For right now, I'm going to say yes, only because it can't be as slow as it has.
That's a good point.
It would be hard for it to be slower than it was in the first quarter. It would hard to be keep up on the slow pace of.
I do agree with that. Yeah, but I guess to me it's who knows at this point.
Mm-hmm.
But I guess you're right. Line will be a huge factor in kind of telling us what will happen for the rest of the year.
Mm-hmm. And so we need to keep our eyes on that next week. That's all we have for you this week. Thank you for listening to the Zacks Friday Finish Line. Catch us at the same time, same place next Friday. And if you are interested in hearing more or reading more about any of the stories we discussed today, refer to the links in the accompanying article, and you can find all the details you need. With that, have a good weekend.
Yeah, have a good weekend. Stay safe.